Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/rive to receive the top 10 stocks to buy right now. The casino business is not the high-risk investment it was in the 90s and early 2000s. Today, casinos are really money-making machines, and there's no reason that's not going to continue long-term. I want to go through one of my favorite stocks, MGM Resorts, with you in 3 minutes. Let's start with MGM's business model, and that's really just they own resort and casinos, and then they've got some digital products they're sprinkling in as well. Start with the Las Vegas Strip. They own about half the Las Vegas Strip. You can see the map here, a really extensive set of properties, and then they're consolidating what they own, selling off the Mirage there in the next few months on the north end of the Strip. What you might not know is they generate about 75% of their revenue off the casino floor. So hotel rooms, restaurants, clubs, things like that are generating a significant amount more revenue than the casino. That's a big change over 2 decades ago, but that's something that we see across Las Vegas right now. Now, the opposite can be said in regional casinos. So this is the sprinkling of resorts that they have across the country. About 75% of revenue in those resorts and casinos comes from the casino floors. Really a flip of what operations look like in Las Vegas. The other piece of the business is Macau. MGM Resorts owns 50% of MGM China. That's a company with 2 properties in Macau. This was previously just a cash flow machine for them. They've run into some issues because of policies in China. I will get to the numbers and the impact on their both revenue and cash flow in just a second. Now let's get into the financials, and this is where I think MGM gets really interesting. Actual revenue for the second quarter of 2022, $2.1 billion. That is significantly higher than $1.5 billion in revenue in Q2 2019. Remember, that was before the pandemic. So that's why we're using that as a comparison here. And more than double a year ago. Adjusted property Ebitda, this is a measure of cash flow. This is a commonly used metric in the casino industry. What casinos do is they spend a ton of money upfront building a property. So then depreciation isn't really an expense that makes a lot of sense to think about long term. So we pull that out along with taxes and some other amortization. And this gives us a proxy for how much cash flow is coming from those resorts. $418 million in Q2 2019, $825 million in Q2 2022. So just incredible growth. This is because the Las Vegas Strip is just booming right now. Regional property is a little bit of a different story. You can see that things are fairly flat. This is pretty consistent with what you might think about in regional casinos. Didn't have the same drop off as Las Vegas did during the pandemic. Also didn't have the same recovery. So pretty solid cash flow here, $340 million in EBITDA. But these are just cash flow properties that MGM keeps adding to the mix. MGM China, the Macau properties, this is really where things get interesting. You can see $706 million in revenue in the quarter 3 years ago. Last quarter, $143 million, and the casinos were actually shut down for a chunk of that time. It lost $52 million. This should be an absolute cash flow machine. You can see that in Q2 2019, that's a run rate of about $700 million in cash. So what's going on here is the entire Macau region is being impacted by COVID policies set in China. Most of the gamblers that came to Macau were either coming from China or Hong Kong, and that flow of travelers has just come to a screeching halt. And that's why we've seen revenue just completely dry up in that region. So is MGM stock a buy? Well, let's just look at the basic numbers here. $13.8 billion market cap. They do have debt of about $2.5 billion, but they're buying back stock pretty rapidly at this point. And the PE ratio is just 4.9. There may be some unusual gains in there, so I wouldn't take that to be the long-term PE ratio. Dividend yield, also extremely low. They are still paying a very, very small dividend, but that has not come back to where it was pre-pandemic. I would expect that to return in the next couple of years, but just another thing to keep in mind. So I think this is really a value stock, and the investment case is pretty simple here. Las Vegas and Macau have gone through 2 decades of supply expansion. Now we're at the point where actually demand is expanding and supply is pretty constrained. Not only is there not a lot of space to expand, but regulators are not excited about there being more casinos in Macau, and construction costs have simply gotten so high in Las Vegas that there's not a flood of new multi-billion-dollar casinos going up. That's really great for a company like MGM's operations because they just become a cash flow business. And I think this is how investors should look at this company long term. This is a cash flow company, and that's why I like this stock long term.